just edit out the beginning. Okay. All right, ready?
Sure.
Okay. Hey everybody, Jen McGill is here, Realtor in Cincinnati, Ohio with Keller Williams. So glad that you could join us today because I actually have a special guest with me. As you can see, I'm sitting next to Dawn Parks.
Hello.
She is one of the best mortgage agents in all of Cincinnati. I refer all of my business to her, and some of my past clients can get on here and can comment about what a great mortgage agent she is. She is a real hustler, and I don't mean that in a negative term. Dawn really will make sure that if she promises you a loan that it will get pushed through. I can think of one instance specifically where she busted her butt to make sure that that loan got through. And I am a person who truly appreciates loyalty, and so I appreciate that Dawn is willing to work hard for us. But anyway, the reason that I have Dawn here today is I've received several questions from potential clients or just people who have questions in general about the loan process, the home buying process, and I thought that this would be a great opportunity to kind of share all of those answers with you. They're pretty general questions, and so I just felt like it would be helpful to everyone if we went ahead and did this. So without further ado, let me ask Dawn a couple of these questions.
Sounds great.
And then if you have any questions also, please feel free to go ahead and email us. And I think that this is going to be something that I'd like to do with you, maybe with a little frequency. So
Sounds
as we assemble some questions, we can do another one and then another one. Okay,
Sounds
great.
perfect.
Thanks, Dawn. Okay, so the first question comes to us from Deborah. Deborah says, Jennifer, I think I want to buy a condo, but I've heard it can be a little different than buying a house. Can you help me understand? So,
Well, a condo financing and stick-built house financing are a little different because a condo is tied to a whole association instead of just as a stick-built house as a standalone entity. So when you're going into purchasing a condo, those condos have to be FHA and VA approved, which is kind of a difficult process. So what happens is if the complex is not approved in which you want to buy, it kind of limits you to having conventional financing with a little bit more down payment.
okay.
And I think the reason for that is there's a little bit of a risk associated with buying the condo as far as how much it will appreciate, because again it's a whole community, so if one or two condos sell very cheaply, that's going to pull down the value of the entire complex and make it difficult to obtain financing at the price that you want to sell or buy a certain condo for. So again, that's kind of a whole community inside, not just your condo. Sometimes though you have condos or condo guidelines for some type of properties called landominiums,
Okay.
in which you actually own the property or the land that it sits on. Because when you own just a condo, it's just the building, and it's kind of really just the inside of the building, not even the building itself. And they're a great lifestyle for people who want to live in those communities.
Right.
But sometimes you just have to be very careful on exactly what the bylaws say as far as what restrictions the condo puts on it. As far as some of them say that if you buy it, you have to live in it. You can't rent them out. So
Sure.
you just make sure that you know all of the restrictions going in when you write the offer of what you're going to getting, and definitely tell your mortgage professional, hey, I want to buy a condominium, because they can go in and research which condo complexes are approved for certain types of financing and which ones aren't.
Right.
And that would kind of help them determine what kind of a down payment requirement for specific communities are out there. Also, too, the other thing about the condominiums is that each complex or each community has their own condo fee.
Sure.
Which incorporates, taking care of the community space or a pool, or they do landscaping and all of that, and the exterior maintenance on all of the buildings.
Sure.
And then sometimes on certain complexes above and beyond their fee, which may range from $100 up to $300 or $400 a month.
Sure.
They even have special assessments. So if the roofs need replacing, they may charge you an extra $100. So, and that's not normally given out, because that's a totally different thing. But the other thing too is definitely before you write the offer is to know who manages the community.
Okay.
And they can also tell you how many, there's what they call a condo survey that a lot of people can get. And it'll tell you how many of the unit owners are behind on their dues, and how much, if there are any special assessments coming up. and any kind of restrictions, again, that you want to know about before you go in and buy into a community.
As a potential buyer for a condo, why would it be important to know who's behind in their payment?
Well, if let's just say that out of 100 units, 15 people are behind, and depending on how much they're behind, that means the condo's budget, because they have a budget for how much goes to snow removal, how much goes to landscaping, how much goes to for the pool. That money has to come from somewhere.
So put to the new people maybe making up the difference?
That's correct. And for example, like if a condo goes into foreclosure, and there's a past due fee of $6,000 of unpaid condo, because if you're not making your mortgage payments, you're probably not paying your condo fees.
Sure.
Especially if it's empty or whatever the case may be. Sometimes they can't recover those costs.
Okay.
Because if it goes to sheriff's sale, any lien against that condo is wiped away.
Okay.
So now the condos, there's a hole in the budget.
Mm-hmm.
And somehow that's, you know, and that's just something to keep in the back of your mind to know. And if there are a lot of foreclosures or people are behind, then it's kind of why is that happening in this community, because you don't want to see maintenance on a community go downhill.
Right.
Because if the condos on the outside start looking like they're definitely in need of upkeep, then there's some big signs that go up.
Sure.
And also, as a mortgage person, when we go do our condo questionnaire, we ask how much of a reserve they have to cover those pitfalls.
Sure.
I mean, you know, because you never know if the wind's going to come and blow off a roof.
Seriously.
And usually the condo carries insurance for the exterior of those buildings.
Okay.
But usually those deductibles are like $5,000.
Mm-hmm.
So if they have these, you know, as our weather here is a little out of control, you want to make sure that where's the $5,000 going to come for these claims. So I personally live in a condo, and we had a lady's condo burned down because of a faulty dishwasher.
Oh, yikes.
And so what happens is it's the condo's responsibility to cover the exterior. So where it burnt out on the outside, we have to replace the siding and the windows and any roof damage. But walls in are your
personal.
That's right. So when you go to get insurance, if you purchase a condo, you will get walls in, which covers your drywall, your carpeting, and your interior stuff. But the condo has to pay for those expenses on the outside.
Okay. So it sounds like getting a condo could be a little bit more complicated, but if you're looking for that condo lifestyle of some of it being maintenance free, it could be beneficial. Yeah,
usually it's not more complicated. It's just that you need to know what steps personally to protect yourself. Okay. I mean, there's a lot more that you can research on a condo than you can on a stick built. Okay. Just because a normal house doesn't have all of these extra things, but I think it's well worth it if that's what you desire. Certainly. Certainly.
Excellent. Great answer. Thanks. All right, question number 2 out of the 4 that we have. This comes from Mike and Melissa, and this is something that's kind of near and dear to my heart as a former Marine and obviously a veteran. I'm glad to get this question, and I'm really excited to be able to answer it for people today. So Mike and Melissa say, I'm a veteran and I want to use my VA loan, but I have no idea where to begin. Can you give me some guidelines? Dawn.
VA loans are the best loans that we have for a couple of reasons. Number one, they are 100% loan to value. You do not have to have any down payment whatsoever. Nice. And there's no monthly PMI. Awesome. So it gives affordability for the monthly payment. There is an upfront fee, a one-time upfront fee, very similar to how FHA is structured, but the loans are fantastic. And a lot of people stress out because, I don't know where my eligibility certificate is. I don't know any of this stuff. How do I get all of this? That was our question. We have no idea where to find that. Your mortgage person should be able to get everything for you. Okay. And the only documentation that you need, in addition to all of your pay stubs and things, is a DD-214 if you are out of the military. If you are currently in the military, you don't even need to supply that. Okay. The other thing, too, that's very interesting to note is if you have any type of disability from the military, that upfront PMI is waived completely. So no, that's interesting because I thought it was at 20% disability or more. It is. Okay, so 20% disability or more, and that fee is waived. Yep. Okay, excellent. Yep. And The VA does things just a slight bit different on what we call debt to income ratio. So what they do in a conventional loan is they take your gross income, multiply that by a percentage, and that's what your total debt cannot be more than.
Okay.
The VA goes a little step further, and they take your net income minus what they consider expenses and daycare, and they kind of back it out because they don't want to get their veterans in a situation where they, even though it says on paper someone can afford a house, but if they're paying exorbitant daycare expenses and other things, they're not going to want to put a veteran into a house that he or she can't afford.
Sure.
And it is very good to shop around. If you call a loan officer and say, have you done VA loans in the past? How many have you done?
Absolutely.
What is your company's experience with helping me get this certificate of eligibility? Do you know how to multiply it by 4 to find out what I'm really eligible for? And there's a little things that the lenders do behind the sidelines that you never see. But if you don't have a company who's familiar with the product,
Nice.
it's going to just drag out a little longer and take them longer to figure out what they need to do to catch up to speed.
Right.
But definitely that would be a question that I would ask is, are you familiar with the VA guidelines? Because they are excellent loans. And if you already have a VA loan, VA offers a streamlined process, which is a piece of cake. You supply nothing, and you get to streamline your interest rate down to the lowest possible rate.
Nice.
So if you currently have a loan anywhere over 4.5% to 5%, you should definitely call someone, because you should be able to streamline with no appraisal, no income, no nothing, down to the 3.5% or 3.75% or whatever today's rates are.
Are you kidding?
I'm not kidding at all.
Well, Dawn, I might need to call you to get my house refinanced. We refinanced a couple years ago, and I'm certain that it's more than 4.5%.
Yes, you should. I think 3.5%, 3.75% is today's 30-year rate. So.
Well, I will be making an appointment with you shortly.
Okay.
Excellent. Thank you for
You're
that
very welcome.
information. I love it. Okay. Real quick, you brought up something that I just want to make sure that we touch on before we go on any further, or before we forget. You had said to make sure that you shop around for different mortgage agents. Can you just chat about that for a little bit? Because I don't think that people think about doing something like that, and I want to make sure that everyone knows the best that they can, knows how to go, you know what I'm saying?
Well, when you go to apply for a mortgage, for a pre-approval or refinance or whatever, the credit report, people are all concerned about how many times your credit is pulled.
Yeah, I hear that a lot.
Score,
right.
And you actually have 30 days to go out and shop around, and it's considered one pull. So if 6 mortgage companies pull your credit
Interesting.
within a 30-day period, it's considered one mortgage pull, because you're allowed to show. They want you to go out. A couple questions that I would ask a mortgage person is, how long have you been doing it?
Okay.
What are the term times? How often will you call me back?
Oh my
and
gosh, that's huge.
what can I expect my service level to be? If I call you right now, and I know you're busy because the rates are so low and you have 600 clients.
Yeah.
How long will it take you to call me back? Their answer should be the same day. Even if it's 9 o'clock at night, they should call you back the same day. So don't settle for anything less than, because you're going to be frustrated.
Let me just plug you for a second real quick. Dawn will call you back. I promise you. Every time I give her phone number out, she calls people, and she has called me at 9 and 9:30 at night. But here's the thing, I'm a hustler too, and I expect the same out of the people that I give referrals to. So Dawn will call you back. It may be 9:30 at night, but I would rather get a phone call at 9:30 at night than to go to bed wondering why that POS didn't call me back, because I have a high level of expectation for the people that I work with, and you've never disappointed me. So there you go.
I think service is key, but not only your loan officers. Your next question will be, how long will the process take from start to finish? And I will tell you now that banks are slammed. They have more volume than they can keep up with. Again, the rates are in the 3s for a 30-year, which is absolutely crazy. I've done this for 20 years and I've never seen that in my career.
Yeah.
So again, find out what their turn times are for the bank itself, or for that mortgage company or whatever.
Okay.
There are some times that I will say that a big bank is a great place to get a mortgage. And there are times that I will say that a mortgage broker or a mortgage company is a better place. And it all depends on what you're looking for. There might be a bank out on the street that offers you 4% and absolutely zero closing cost. Well, how does that correlate with 3.5%? And then what will those costs be? And how long will it take you to make up the difference in that rate versus the cost of the closing cost? So there are definitely things that you want to sit down and look at. And you might even want to, after you have 2 loan officers that you like, or 2 different things that they quote you, you might just want to go to a completely different company and not even be interested in those and just say, what do you think is better? How long will it take me to recoup the cost out of pocket? There's a lot of different terminology or ways that banks package stuff up so that you're not really sure what you're getting.
Yeah.
Because if, again, somebody's quoting you no closing cost, maybe it's not a true no closing cost. Maybe they just don't have a fee. Maybe there are title and still appraisals, but again, it's all in. And there are companies that will spell out every cost of the loan for you. And now it is a law that says if this is my good faith estimate, and it is official, that this has to be what I deliver. And if it's not what I deliver, the bank has to pay you what they call a cost to cure those. So they cannot change their fees from the day that it is quoted to you in writing until the day of the closing.
Nice.
So that was a very nice law. But again, there are things that change. Your loan amount can change, or you want to buy your rate down, or rates go down. So there are some things that you may want to change during the process, and at that point you simply just kind of do a withdrawal and start over to get what the customer really wants at the end of the day based on all of the things come together.
Sure. Excellent.
Yeah.
All right. Thank you.
You're very welcome.
All right. So this next question was pretty pertinent because I think that probably a lot of people are still dealing with this type of an issue, and so I felt like it was something that was really worthy of including in our video today. So the question comes from Maria, and it says, I lost my home to foreclosure 2 years ago after my husband died. I have the money for a good down payment. Is it possible now for me to buy a home again? How would you answer Maria's question?
Well, again, okay, so we have foreclosures where the property actually goes to sheriff's sale. We also have things now called short sales, which is kind of the same thing, except it's a little quicker process because a realtor can sell it, hopefully. But again, what the guidelines say today for FHA, and again, those could change at any given moment. FHA keeps changing their minds.
Tomorrow, yeah.
But today it says that you must wait 3 years from the date the property is deeded out of your name.
Okay.
So if your property goes to sheriff's sale today, let's say it sold this morning at a sheriff's sale auction,
okay,
it's not going to be deeded to the bank for 60 to 90 more days.
Okay.
So you can go on to your or in Butler County, so Butler County Auditor or your county's auditor's website, and they will have that property address and what date that was recorded.
Right.
So that's the date it starts. So then it's 3 years from that date.
Okay.
So what I would tell Maria is if she has money for down payment, just keep saving it.
Yep.
And she would start that process about 4 months before her 3 years is up.
Okay.
She can get a pre-approval letter.
Okay.
She can just not close until after that 3-year date is up. So.
Okay, nice. Maybe put that money in like a money market account or something and allow it to draw interest and build for her during that time. Okay.
Exactly.
Excellent. All right, thanks, Dawn.
You're welcome.
All right, last question of the day. And I left this one for last on purpose because I feel like it's probably going to be the longest answer. But I think it's the.
I'll rattle on you forever.
I have no doubts in my mind. Thank you. But you give great information, which is why I let you keep going.
Okay.
This one is probably the question that is on most people's mind. And so Susan wrote into me, I guess in behalf of Susan and her husband, but Susan wrote, my husband and I are first-time buyers, and we have no clue where to go to get started and what the process of purchasing a home looks like. What is the first step? So Dawn, maybe could you give us like the first step and then the second and the third step?
Sure.
Okay, great.
If I said to myself, I think I'm ready to buy a house, I'm sick of paying this rent, it's not getting me anywhere, it's
Sure.
you're just kind of throwing money into somebody else's pocket for profit. So the first thing that you want to do is know what's on your credit report. And you can go once a year to annualcreditreport.com,
Okay.
get a free copy of the report.
Is that the one the government put together?
That is the one the government put together.
Okay.
There is no point of going to a website and paying for your credit scores because the credit score that you get is going to be way different than the credit score that a mortgage company pulls because they use 2 different scoring models. So people call me and say, hey, I pulled my credit, it said I'm a 613. Well, when I pull it, you're a 500. So
a little different.
It's very different because of what we're looking. Mortgage companies want something specific.
Okay.
And so they have a model that's set up just for that. So don't waste your money on a credit score.
Okay. Let you do the work.
But what you need to look for is in the last 12 months, have you had any 30-day lates? Have you had things recently go into collection? Those are what's the key to how have I paid my bills in the last 12 months?
Okay.
Don't call a mortgage person and say, hey, I want to buy a house, but I'm still behind on my car payment over 30 days.
Wow.
So you need to know, hey, I have good credit for the last 12 months and it shows I've had no new collections. Everything I have is old, or if I have a bankruptcy, it's either 2 or 3 years old.
Okay.
And just kind of feel confident that, hey, I've paid things on time and I should be rewarded for buying a house.
Okay.
If you have questions, is my credit good or not? I don't know. How do I know?
Right.
Just call somebody and say, hey, I got a free copy of my credit report. Any mortgage person out there will say, let me take a look at what you have.
Sure.
And I can go through the accounts and ask you some questions, because a lot of times, hey, that Time Warner, I never had a Time Warner. Why is that on my credit as a collection?
Right.
I've always had, Satellite or Rabbit or whatever the case may be.
Yeah.
So there are great ways to dispute things on your credit.
Okay.
And get things taken off that aren't true. There are some ways to get things taken off that even are true, that are just kind of old and looking ugly. So there's a lot of things that you can do with the right help of a right person to get the credit even looking a little nicer.
Right. And I know that you've worked with some of my clients in the past on stuff like that, and so you would be a great source to go to.
Yes, and never pay somebody.
Never.
For credit repair, because
Ever.
all they're going to do is hand you a letter and tell you to mail it in that you
Yeah.
could have written yourself for free of cost. So,
Or Dawn could give it to you
yes,
for free.
do not pay somebody.
Give me a break. I can't understand those
But anyway,
people.
The next thing that you want to do is sit down and make yourself a budget. And it doesn't matter if a mortgage loan officer says to you, hey, I have you pre-approved for up to $200,000.
Mm-hmm.
If you are only comfortable paying $1,000 a month for a house payment, know that that's it.
Yeah.
Don't say, oh my God, $200,000.
Don't get sucked in.
And then you go find this gorgeous house, and then you realize the house payment is $1,600.
Yeah.
Well, you don't want that. You can't afford that. That's not. You don't want to be house poor.
Right.
So stick to your guns and say, I want the $1,000 house payment as my cap. I'm more comfortable with $900.
Sure.
And your mortgage person should be able to work it backwards and say, here's the max. Don't look anything above this.
Sure.
But you also have to be very careful is when our market is in the way that it is, when you go to look for a house and you find something that maybe is a foreclosure or a short sale, and you're getting a really good deal, those property taxes are still based on its old value.
That's true.
And so those property taxes may put your payment a little more than what you wanted, because they're basing on a much higher value than the bargain that you're getting it for. So there's a lot of little things to look at when you look at what your mortgage payment will be. So that's just things to ask your person and say, hey, we like this house. What will our payment be?
Yeah.
And then
that's huge. I didn't know that when we bought our house. I didn't think about filing or paying for your taxes and your insurance. I just said, oh, we can afford such and such amount of money.
Right.
And that's what we looked at. And then all of a sudden we're at the closing table because the rule didn't exist then
They
about
had
the
to
2
tell you all
days
the
prior.
stuff.
Yeah.
Okay.
And so all of a sudden, we thought we were comfortable paying a certain amount of money for our mortgage, and then here's your mortgage payment, and it was like $400 higher than we were expecting. And so at that point it was like, can't not buy the
close.
house.
Right.
These people are moving to Maine, literally are moving to Maine after we sign these papers. So,
So
get
definitely know all of those
that.
key points.
Right.
The other thing that I think the next step is know how much of a down payment would be required.
Right.
So if you said to me, hey Dawn, I want an $800 house payment, I would say then stay in the 100,000 range, because that's going to give you even a little buffer there, maybe 110. We can go through each specific house in those price ranges and see what the payment comes out. But on your $100,000 house, know that if you want to do an FHA loan, you're going to have $3,500.
So 3.5%.
3.5%.
Okay.
And that can come from your own money. That can come from a loan from a 401k. That can come from a gift from your parents.
Nice.
But you have to have that money, and you have to be able to show, you have to be able to source it.
Okay.
I'm getting this money from my mom, so the loan officer will tell you the steps that are required to get the money into your account the correct way.
Okay.
And then, or I'm pulling it out of my 401k, or here's our savings account history showing that we've been putting so much in.
Okay.
Just show me where the money is. It can't just pop up at the end.
Like the lottery.
And you can't just borrow it from a credit card.
Ooh.
No borrowing funds. So
Okay.
if you say, hey, I have equity in my car, I own my car free and clear,
Sure.
I can go get a little loan on it. Well, go get a little loan on it, and it has to be seasoned then in your account.
Okay. Meaning sitting in your account for a couple days?
For a couple months.
Okay.
Then we don't want to know it's borrowed anymore. Because you've owned it. It's been your money for 2 months.
Okay.
Okay, so now it's your money and you have it in a savings account.
Okay.
So you can't do that. You can't go get the loan today and then put it in and then we're ready to go.
The next day.
You
Okay.
have to kind of just show that, hey, I've had that for 2 months.
Okay. Which it takes about that much time to find a house and get the offer negotiated and get ready for you to actually start doing your magic, which
Right.
is assembling the paperwork. So.
Right. So I think if you know those few things,
Your credit score?
you know what your credit looks like, know how much house payment you want to
Okay.
have, and know how much money you have to put down or what would be required to
Okay.
put down, and then
Okay.
figure out how you're going to get that money.
Yeah.
At that point, then I think you're good to go, and I definitely would go back to the advice of shop around and find a mortgage person that you're familiar with,
Okay.
and that you trust. And then the next thing is once you get to the pre-approval, get it in writing.
Absolutely.
Not just say, hey, you're pre-approved, go get in the car with your realtor
Right.
and drive you around, and then at the end of the day, it really wasn't pre-approved.
Refer to my video of why my buyers need to be pre-approved. There we go.
Because, I mean, there's a whole lot of things. So there's even different levels of pre-approvals, okay? So if you call me on the phone, I take your information, and you say, hey, Dawn, I make $15 an hour, I work 40 hours a week, and I say, can you document that? And you say, yes.
Mm-hmm.
So I'm going to go by your word that this is what you make.
Right.
So there's a little system, a computer that we run all of your information through that pulls your credit and says, yes, you're based on your credit, you are eligible. So that is a credit approval.
Okay.
Okay? But then the next step is to actually bring me those pay stubs, bring me those bank statements,
Verify what
prove
you said.
to me that that's what you make,
Sure.
prove to me that's how much money you have in your accounts, and at that point then you go from a credit approval to, well, you go from like a credit bureau approval to an actual credit approval that's been looked at and your stuff's been checked off, that
Okay.
yes, you've met all of the qualifications.
Got it.
And all we're waiting for is a contract and appraisal.
Nice.
And so that really should be the process, that if you've supplied all of those things, again, the underwriter's still going to come back and ask for something very bizarre and off the wall, so just be prepared.
Second grade teacher's signature
Yes,
on their
correct.
spelling test or something crazy
Your
like
blood
that.
type, or,
Your grandmother's documentation for when she came to the country,
Yeah.
something bizarre like that.
yeah. So anyway, it's a very simple process if you just know all of those little things, and again, don't get just excited if a loan officer says you're approved for 200. That doesn't mean you want a house for 200.
Absolutely.
Stay with what you're comfortable with. And I
Right.
think in my career, one of the first questions I've always asked is, how much do you pay now in rent?
Mm-hmm.
And what do you want your new house payment to be?
Okay.
Because if you're only paying $500 in rent, when you jump up to $1,000 house payment,
It's huge.
that is a huge bite out of your whole lifestyle has
Yeah,
to change
absolutely.
in order to make that payment, unless you're going to have a roommate or something to
Right.
offset that. But
Right.
and the other thing too that I don't think people consider enough is that, especially in the FHA guidelines, if you go find a 2-family or a duplex or a 3-unit, and you want to live in one of those units, you get to count the rent that comes in from the other units
Nice.
to offset your payment. So if you go out and find a gorgeous duplex,
Okay.
and one half of the duplex already has a nice little renter in there paying $600 or $700 a month,
Awesome.
that gets counted. So, that might be a way to get a nicer place
Yep.
than what you had originally thought of. But again, not
Absolutely.
everybody was meant to be landlords, because again, there's frustrations. They're going to move out, and you're going to have to replace carpeting. There's some maintenance issues that you
Sure.
definitely want to. It's just not like you're going to move in and nothing's going to happen.
Ever.
But again, it's a nice way to live someplace for less than what you kind of think that you could live there
Right.
for. And so those are just some options to think about when you're out there house hunting.
Absolutely. That's a great point. I don't think enough young people, first-time homebuyers, think of that
They
as
do
an
not at
option.
all. They don't. And
They just want their little house.
that's correct.
And they don't think about, well, if I could just build equity for 5 or 6 years.
I mean, if you bought a 2-family or a 3-family and you lived in it, like you said, for 4 or 5 years,
yeah,
and then you go buy something else to live in for yourself and keep that,
then you have 2 incomes.
Yeah, so it's a very nice way to accumulate some properties.
I think it's a no-brainer, but what do I know?
Every to each his own. That's why we all are different.
There you go. That's exactly right. Well, Dawn, I really appreciated the time that you spent with us today. I know that this is one of the longer videos that I've ever made, but I felt like the information that we provided today was useful, and there's no way we could have crammed all of that into about 5 minutes or less. So.
Yeah, I kind of ramble on. So.
No, that's okay. But you know what that shows me? That shows that you have a ton of information inside of you, and you're just trying to get it all out as much as you can. So if anyone wanted to get a hold of you and actually sit down and hear more of that information, how could they get a hold of you?
You can call my cell phone at any time, and that number is 513-227-8380.
And you text and
I text
call.
and call.
Yeah, she's awesome.
I love texting.
Yeah, I do too. That's great. Yeah, free texting. I have unlimited. Do you have? My husband saw 1,600 texts 1 minute or 1 month. He was like, "Oh my god, 1,600." Imagine what the minutes would have been if I had to talk that entire time. So, anyway, all right. But then also email if someone would prefer to email.
I am Dawn at dawnparks.com.
DAWN.
And I'm her Facebook friend too. So if you're friends with Jen on Facebook,
there you go.
Find
Absolutely. So Dawn DAWN at DAWNPARKS.com, correct?
Yep.
Okay, awesome. Well, everybody, thank you for watching our 32-minute video. We really appreciate your time and your patience with us. We hope that you have learned something. If you have a question that you'd like to see Dawn or myself answer for you, please feel free to submit it to me. My email address is CincinnatiJenn, that's JENN at gmail.com. Again, that's CincinnatiJenn at gmail.com. Or feel free to call or text me at 513-344-9077. Again, 513-344-9077. Thank you very much for watching. We hope you guys have a great day. Take care. Bye-bye.